Good morning. I'm Scott Redler, Chief Strategic Officer with T3Live.com.
And I'm Alex Yeo with The Street, and together we bring you Morning Call Express. Scott, stocks had a big bounce on Friday, the S&P closing above the 1220 level. What's that next level of resistance that you're noticing?
This 1220, 1230 is what everyone's been looking at, what everyone's been speaking about. It's very important, or it's just say a win for the bulls, but to me it's somewhat irrelevant right now. What you have to do is you have to look at the action. You have to see what has happened from 2 weeks ago leading into that 1220, 1225 area. So if you take a quick look at the chart here, you will see that here's the S&P. This is the day that I get excited about. Everyone gets excited up here as we knock on the door of resistance, which makes it a bit trickier to continue. This is your day one. And then if you miss this 3-day move, this really was your area. This is when the market said, we have commitment here. We are buying it higher. We followed the retracement rules. And then you had nice follow through up to 1220, 1225. This area might take a little time to get through because we just went from below 1100 to above 1200. So in order to get to 1250, 1300, which I do think we can get to at some point this year, it doesn't have to happen in a straight line, but everyone loves to chase on the 9th or 10th day.
Right, and Sam Stovall, Chief Equity Strategist at S&P Capital IQ, said that we could run into trouble around that 1230 area, probably indicating we could see another leg down before we see that next leg higher. So if you don't want to chase here then, how can you position yourself to take advantage of any kind of pop we might see, but in addition, preparing yourself for a kind of down move?
Well, know your time frame and know what could happen, because if you look at this rally, you've seen that we never pulled back more than 20% of what transpired. So in order to continue to measure the move, you want to see if that changes, because if that changes, then we can get a bit more of a pull-in, so you have to map out those areas. So for right now, if you go back and take a look one more time, you will see that after this first move from 1100 to about 1170, there was no pull-in. It was like not even 20%. Remember, I did the Fibonacci retracements, and then we moved up again, and then look at this pull-in. It was insignificant. So the question now is, do we go sideways and pause and continue this trend, or does it come back and maybe want to make a higher low, which it can? So you have to monitor the action, just know, what you can handle on a risk level. I do think if you're holding 4 to 8 positions long, have some spiders short against it. The VIX just came in a ton. So if you have a big portfolio out there, buy some VIX just as insurance, because insurance is always more expensive when the storm hits.
And real quick, would you be taking some more profits in those 4 to 8 long positions that you have?
Yes, use your tier system. You go in tier 1, tier 2 based on chart patterns. We saw a tier 1, and then earlier last week, a lot of stocks broke above pivots. That was your time to add. And then as we broke above 1220, maybe it took some off in front of the weekend. So now if you're long at a certain level, like Apple, I was long last week, took it home overnight with some options.
Right.
So I'm going to sell some into this up open and then reconfigure for earnings tomorrow. So keep maneuvering your portfolio, keep massaging the position, stay in tier 1 long macro if you have that risk tolerance. And then if you do trade using chart patterns for cash flow, you add and you take off based on what's going on in the environment.
And the perfect way to sort of play this out is going to be with retail. We had that really good retail sales number on Friday, up 1.1% in September, up 8.6% year over year. So let's take a look at the RTH to see if it does have a little bit more legs, and what are the top performers in this sector that people can still look at.
Retail has been unbelievable. It's been acting really well. If you take a quick look first at the spiders one more second, you see how we made a new low here? Check out these RTHs. Never even thought about it. Came back down, held higher. That's, versed the low, and then look at this move. Everyone doesn't understand why. They thought the consumer was dead, unemployment, blah, blah, blah. I know it's unfortunate, but anyway, this is above resistance, and it's already heading back to the highs. So you do have some resistance up in the 112 and 114, so it could take some time, but this group is acting well. Stocks in this group are showing relative strength, and some are already making new highs.
Right, so a good strategy, like you said, short a little bit of the spiders, but then also maybe take a little bit of profit in some of the good performing stocks, maybe like a Macy's or perhaps a Walmart.
Or hold some of the better acting stocks that give you alpha and give you a bigger percentage when it goes up, and then short the spiders against it. So the move in the spiders will be down a lot less than when your good acting stocks go up, and that's how you maneuver, as you get into bigger resistance.
And of course, we have to talk about earnings. It's a very volatile, tumultuous time when they report. Last week we had sort of a mixed bag. We had the Alcoa, we had the JP Morgan, and Google. I mean, if you look at JP Morgan and Google, how are you trading them after, and how are you trading them in this week?
Well, Alcoa and JP Morgan weren't great, but the market paused. So we didn't, pull in and we didn't fall apart. That was healthy. So when we got a good earnings report like Google, you saw Friday's action, which was powerful, and you continued to see, besides retail strength, tech strength. So Google went up 30, 40 points. A lot of stocks within the group went up, and now we have to see how we handle Apple, how we handle IBM, see if this move is priced in, because if all of a sudden IBM comes out and they're great numbers. It's already at highs. If you take a quick look at IBM just to show you, this is already through the highs. So people are going to say and get excited about buying it now. Look at this move that it just had. So if it comes out with great numbers, it could go lower because it's already had that move. So you have to know where the stocks came from, where they are, and what they're expecting.
Right, so maybe the bad news might be priced in, but the good news isn't, which can make a lot of good trading opportunities for everybody.
Yes, exactly.
All right, that's it for us for right now, but if you want a big picture on earnings season and retail and other stock picks for today, check out the entire morning call on the street.